Thank you everyone for being here. Super excited to have you on this Spark Launch webinar with a super awesome guest today, Charlie Graham-Brown from SeedStars. I'll do a very quick intro of myself and Charlie, and then we're going to dive right in. I have a few questions that I am dying to hear from Charlie about his journey, and then also SeedStars. But then we'll also open it up, so I'll keep an eye on the chat. Feel free to drop Q&As, questions over there. So very quickly, just a very quick intro about who I am. I am Mariam Nusrat. I'm the founder and CEO of Breshna.io. The best way to think about Breshna is like the Canva for video games. So we're changing how people can make their own games with no coding, lightning fast, and at low cost. And we're also changing how these games are used. So these can be educational games, social impact, marketing, training. So think about a teacher making a run and catch Super Mario-like game where you're catching even numbers and dodging odd numbers. We've been at it for 3 years. We have 180,000 registered game makers, 160,000 video games, more than 2 million gameplays. We raised $2.6 million in seed funding from investors like Paris Hilton, Randy Zuckerberg, Bill Ackman's family office. So kind of like a fun, cool cap table. And we're on this journey of empowering the next 100 million people so they can tell their stories through video games. But today is not about gaming. Today is about seeds, A380s, and funding and investments. I am super honored to introduce Charlie Graham-Brown. Charlie, I'm gonna try to introduce you, but I don't think I'll be able to do a ton of justice. So I'm just gonna also open it up really fast, but let me just go through this blurb that I have in front of me. So Charlie Graham-Brown is the Chief Investment Officer and co-founder at SeedStars, a sector-agnostic seed stage investor with 70+ startups in their portfolio across the emerging markets, including Pakistani startups like Oran, Aware, and Dastagir. The goal is to add 100 more startups over the next 5 years, so 20 every single year that's coming up. Charlie himself started out as a mechanical engineer working on projects such as the A380 at Airbus. Anyone who was tuned in before heard me geeking out over the A380. So that is a very exciting part of Charlie's background. Seeking a faster paced career. I don't know what's faster than the A380, but Charlie did switch tracks to an MBA from the Collège des Ingénieurs in Paris and subsequently moved to Geneva and into investment management. I probably butchered that name, but I'm a novice French speaker. I'm just starting out. Thank you, Charlie. Charlie spent 4 years with Blue Orchard Finance, investing in high-impact financial institutions in 20 countries across Africa, MENA, and became a CFA charter holder. The entrepreneurial bug struck in 2013 when Charlie started his own venture before joining the founding team of SeedStars in 2014. So 2013, you started your own thing. 2014, you joined SeedStars. He's been instrumental in the growth of SeedStars from a team of just 6 people operating in 20 countries to a team of over 100 operating in more than 100 markets. Responsible for investments, he has accumulated deep knowledge of technology trends in emerging markets with a portfolio of over 67 startups in 31 countries. So as you can tell, I am pumped about this conversation because that bio is mind-blowing. So Charlie himself is an amazing beast, like I like to call the A380, and I will try to stop with these A380 references. But thank you so much, Charlie, for being here. Just say hello, and then we'll...
Thanks to Pack Launch.
Thank you so much for being here.
You did me a lot of justice, too much justice. So thanks for recapping, I guess, my background. I don't think I'd add much. Obviously, numbers change. Some of those numbers a bit outdated, but anyway, it's all within the realm of accuracy and reason. So all good.
With some standard deviations, they're probably...
Now I can't hear you.
I love that. So Charlie,
Mariam, now I cannot hear you for some reason.
Weird. I couldn't hear you for a second. Can you hear me now? Weird.
Logging in early and checking the sounds. This is a bit annoying.
Anyone hear me?
Okay, try again.
Can you hear me?
Yes, now I can.
Okay.
It was mine.
Weird. Yeah, for a minute I couldn't hear you either. Like you came in and out, but I think if everyone can hear us, we're still on track. Okay, I got some yeses from the chat. So Charlie, diving right in, your background is quite diverse, right? From mechanical engineering to now venture capital. What can you talk about this transition and what inspired you into it?
Yeah, I mean, I guess going from engineering into finance was a decision based on, based on the experiences that I'd had with the A380, with Airbus, and just not finding, I guess, the environment and the pace that I was looking for. I tried consulting, but then ultimately ended up in the investment management space. Within investment management, I started off in more traditional asset classes. So public equities, primarily fixed income and some other asset classes, but more kind of traditional asset classes. And I don't know if it was quick, it took me a year and a half, I guess, at that first company I was with to move on and find something that was private equity or private credit related, so private market related, and also emerging market related. Um, and I guess what drove that decision for me was really trying to find something where it's a little bit more hands-on. The problem when you're investing in public equities is you don't really get any direct contact with the companies. Firstly, because you're small and insignificant, and it's just unrealistic to ask their time. But secondly, it's regulatory, and generally what you're getting is what they're publishing to the world. That the analysts, of all of the different banks are kind of going through the same information. And yeah, it just felt very hands off and passive. And so I sought out something a lot more active, which led me into the private markets. And the other sort of piece that I was looking for and why I went into the emerging markets was having something much more impactful. So still capital markets, I'm still a capitalist at heart, but having something where there was that, whatever you want to call it, purpose, double bottom line, meaning, something in addition to the financial side of it. And so that led me into private markets and emerging markets. And within that, I guess, as you explained, started off in a different asset class, which was microfinance asset management. And then after about 4 years there, sort of got this urge to be in something even more dynamic, which meant entrepreneurship and technology. The microfinance space has still, and back then was definitely failing to adopt technology. And you kind of had this advent of fintech. So I was starting to see that and said, okay, I've got this emerging market experience. I then did my own entrepreneurial journey to get a little bit of that experience as well before then, joining the team of SeedStars. And now I guess that's kind of, partly by design and partly what I want to maintain is that private markets, emerging markets, and entrepreneurship. And that is, in fact, a lot of the founding pillars of SeedStars is emerging markets, entrepreneurship, and technology. So it kind of fits very nicely with what I wanted, with what I want to do going forward, and hopefully for the rest of my career.
I love that story so much, Charlie, because I think as founders, often when you hear founder stories, and I think that's the same, we don't realize that it's the same for VCs, is it's seldom linear, right? Like, I mean, if you zoom out, you're like, what was this dude who was like working on A380s all of a sudden becomes a VC? And then you kind of like start connecting the dots, and it makes perfect sense. It goes back to purpose, motivation, what lights the fire in your belly. And I think I feel that so often, where people are like, you were an economist at the World Bank, how did you end up being a gaming founder? And then you're just like, well, I did this one thing and then this other thing, and then kind of the dots connected. So I know you told us the story. Is there any pivotal moment that you want to highlight, especially when it relates to other founders? Or is it more like you're like, hey, actually it's more gradual? Or is it like, that one day that I remembered that this one thing happened?
I don't know if there's one day. There's probably a few decisions that I took that led me to where I am. And I guess it goes back slightly to not always taking the easy path or the conventional path. So, I mean, on one hand, I guess I'm kind of conventional in that I, did an engineering degree, went to the MBA, kind of followed some of the paths. But I guess on the other hand, I'd signed a contract to go to London, which being I didn't mention I'm from the UK, from Scotland. London is kind of where everyone goes. You get your degree, you go to London. So I'd signed a contract to go there, and I think that was probably the first time that sort of manifested itself in terms of not taking the conventional or easy path. I cancelled that contract and moved to Paris to do this MBA, which meant learning French, which meant, going to a new country, new city, and just sort of taking a totally different path. And I think I did that again when I sort of moved out of the traditional capital markets into emerging markets, into the sort of impact space, which again, back in the time was somewhat unconventional or contrarian. And then again after that, Blue Orchards, where I was for about 4 years, fantastic company, now acquired by Schroders, managing several billion. I probably could have still been there and in that sort of conventional career progression. And I sort of said at one point, okay, I want to go and be an entrepreneur. And it's again just sort of challenging the status quo, which I think all entrepreneurs on this call will appreciate, is what I think defines an entrepreneur and what makes us all different. I think it's a different mindset that we have, and we're not just happy sitting back and sort of accepting things the way they are. So I think, yeah, there's a few of those pivotal moments for me that sort of shaped where I am and who I am.
I love that so much. And I have a feeling, I have a belief that that makes you so much more empathetic to understand the founder journey as well. Like, you didn't start off day one as a VC. The fact that you decided to intentionally break the status quo, often, for instance, choosing instability, choosing not the, maybe even like financially, maybe not the I mean, the conventional decisions, but kind of going that way. I think that's something as an operator that probably, like, it's like makes it really cool
Yeah.
to talk to founders and understand their journey.
I mean, yeah,
Awesome.
okay, so we founded SeedStars as a startup. It's not a tech-enabled startup, but it was still a startup. But a few years ago, starting the investment, the VC fund, it's ultimately an entrepreneurial endeavor. You have to raise capital from LPs, as I mentioned before we started. IFC is one of our LPs, so there's that whole fundraising process. There's building your pitch, building your thesis. It's actually very similar to being an entrepreneur, in many regards. And yeah, I think I have a lot of respect and a lot of empathy for entrepreneurs who are going through that journey, partly because of that, but also partly prior to SeedStars, I was a founder. I had horrible founder market fit, which is why I stopped doing what I was doing. But again, it's that experience that you can share and also, look through a lens with firsthand experience rather than, just getting it secondhand.
Yeah, and I actually believe it's almost two ways. It's really important for founders to also understand how similar the journey is for the VC, for the fund, and that you have to show returns when you go back to your LPs, right? So you're not, I mean, investments are not charity. There are criteria that a founder has to meet. I think we're so close to our product that we're like, but why would you not invest? This is the best thing that's
Totally.
happened since fire, right? But it's actually not the case. You're hearing 100 pitches every single day, and
Yeah.
you have to justify that double bottom line. At the end of the day, there is that bottom line, that ROI. So I think for me, it was really insightful to learn about the fundraising journey of my investors and to learn what metrics they have to meet, and that I play a role in those metrics. Like, I could be that one who gives the returns and everything. So love that. I'm kind of going into the SeedStars focus, right? So you mentioned fintech, marketplaces, SaaS. What drives that kind of, I mean, I think you're also
Yeah.
sector agnostic, but just if you want to shed light on that.
Sure. I mean, maybe I can just try and give a quick history of who SeedStars is, what we do. So, I mean, we were founded, as you mentioned, 2013, three other partners, together with myself, who joined a year later. And we were founded basically with the idea of leveraging entrepreneurship and technology in emerging markets in order to have an impact one way or another. So it's a pretty broad mission statement, but ultimately, I think we've been very true to that. We've remained emerging market focused, and we've, I guess, grown and expanded and built up different skill sets in order to have that sort of ultimate effect. We started off as a startup pitching competition. We kind of did the World Cup for startups. We then started doing programs like acceleration programs and doing things that were more meaningful and long term, versus just, a few hours. It was a few months. And then from there, okay, a few months programs into investing, which is ultimately years. So it was, I guess, the journey of the last, now it's almost 11 years, has really been in around building up different skill sets and different tools that can support the entrepreneurial ecosystems in emerging markets, and really follow and support entrepreneurs throughout that journey, wherever they may be, whether that's really at the sort of pre-idea, pre-launch, finding out what entrepreneurship is through a sort of incubation or company building program. Even before that, now with sort of talent building in the academy, some of the acceleration, and now with the fund at the end. The fund at the end I mentioned is actually just the start, because the fund I manage is pre-seed and seed stage fund, and we've kind of built up other funds on the platform, which will be slightly later stage, or in some cases, thematic. So it's really about building this continuum for entrepreneurs within the entrepreneurial space. Focusing on what I do. So for the last 5 years or so, I've been managing the early stage VC fund of Seedstars. We call Seedstars International Ventures because it's global EM. And as you mentioned, yeah, we're primarily focused on fintech marketplaces and SaaS. And now, why is that? I guess it comes back to the first level of why are we doing emerging markets? And this is for the fund, but also for Seedstars. For us as a fund, it's really about looking where the largest economies are going to be in about 20, 30 years time. Markets growing at 6% year over year versus markets growing at 1 or 2% year over year compounds and makes a big difference. And so if you sort of scope this out to 2050, 6 of the 7 largest economies in the world will be emerging markets. I think Pakistan is about 28th right now, and by 2050 it was, or hopefully will be, around 16th by that ranking that we were looking at. Yeah, a few challenges ahead, but hopefully they'll still get there. So that's sort of the first layer. It's okay, which markets? It's the kind of key emerging markets of the future. So that will be Brazil, Mexico, and LATAM, or it'll be Kenya, Nigeria, Egypt in Africa. You have India, Pakistan, Bangladesh in South Asia, and then Southeast Asia, the likes of Indonesia, Vietnam, Philippines. Within those markets, then the sort of question is, which sectors do we want to look at? We're of the opinion that investment theses need to evolve, and you need to be open-minded, you need to be attentive to what's going on, how things are developing, and sort of adjust as time goes by. It doesn't change every week, but there's definitely shifts and themes come and go. So right now, the themes that are, I would say, most active are fintech and marketplaces. So B2B fintech and B2B marketplaces. Fintech, why is that? I mean, I'm sure you noticed from the press, the media, like it's generally where there is the most revenue opportunity. I think it's a 12 trillion opportunity. It's one of the biggest, if not the biggest in the world in terms of what could be captured. And currently fintechs are only controlling about 2% of that. So there's a lot to be done in fintech, access to financial services, building that out. There's still many millions of people who are unbanked and even more that are underbanked. So, it's a huge opportunity, and we're still investing a lot in that space, whether that's on, payments companies, remittance companies, lending companies. There's all sorts of things going on. The second, it's more of a model than a market that we look at is B2B marketplaces. And the concept here is quite simply that there's trillions of goods being sold that is going to move online over time. In the US, about 17% of transactions are done online. In emerging markets, it's maybe 1 or 2. So there's a huge catch up to be played there. And whether that is for FMCG goods, whether that's for car spare parts, it can be for construction materials, chemicals. Like there's really a lot of different segments where that can play a part. You have strong network effects, and it's a model we think can scale very well with the right founders, the right unit economics. And yeah, these theses evolve, and we just did a deep dive into agroforestry. We did a deal in agroforestry. Is that a long-term thesis? Something we're definitely interested in. It's probably quite niche, but there will be other sectors. And the way we kind of handle that is that we are essentially a team with generalists backgrounds, but then we leverage that with specialists we bring on board. So within our IC, we have specialists from this sort of marketplace space. We have specialists from the fintech space, someone who's a SaaS specialist, and we'll add on others as we develop these theses.
Very, very cool and very interesting. And I think, Charlie, one of the things that's very refreshing is to have a VC that understands the emerging markets to that nuance that you do. And I think that's what, because I mean, emerging market founders have a different set of challenges, right? Like, founders, I always call it, it's a video game where the odds are stacked against you. And it's one thing, it's like to be an immigrant founder in the US, but to be an immigrant founder, to be an emerging market founder, just like, simple things like, we just saw banking became a lot harder for a lot of founders from certain countries and everything, right? So it's like, just general life challenges, visas, all of this stuff, like where you're going to hire, regulatory compliance, all of this stuff. It's part of a founder's day to day. So I think that having a VC who has had that many years of experience and who understands that, and I think fintech and marketplaces, I often, at my time at the World Bank, I used to work on sub-Saharan Africa. We actually saw innovation leapfrog brick and mortar, right? Like, what happened with Kenya and fintech, where, at some point, they just completely leapfrogged banks, like brick and mortar banks. And the same thing happened in education in Iraq, where Iraq was one of the first countries when COVID hit to get on online learning, because they were already on online learning. They were already using radio and TV. So they were one of the first early adopters, because that's just like, you're set up for that innovation. So there's such huge pockets of opportunity that I really appreciate you sharing that thesis and all of that detail. For anyone who has questions, please do share them with Ali. He's going to, at the end, kind of compile them. So if you're raising hands, I see you. I want to hear from you. So let's get those questions going. We're going to very quickly go into market conditions, Charlie. I think, as you were pointing out, like, the market's been very interesting over the past couple of years. I think it's taken a few turns. And it may, Awais, if you could go off video and share your questions in the chat, please, with Ali or with everyone, and then we can get to your questions real fast. So we're going to keep this going until then. So with market conditions, Charlie, what do you think in terms of, one, generally, like, what is the outlook? It's like founders are preparing for longer runway, they're preparing for lower burn and all of that. But then also, especially the emerging markets, like, is there a light at the end of the tunnel? When is that coming? What do you think founders should be preparing for at this time?
Yeah, it's still very tough. I was more optimistic towards the end of last year, so Q4 2023, that we had kind of hit the bottom and things would turn around. Now I'm no longer of that opinion. It's just month after month, quarter after quarter, volumes are extremely low, and we're still, less than half of what we were at the peak, and it's kind of back at 2020 volumes. Number of deals being done global. This is globally, but when you look at it in a region or in a country, it's generally pretty similar story everywhere. Volumes of, or number of deals is still down. Volumes kind of come and go with a few mega deals, but generally speaking, yeah, the outlook is not so good. Sorry to say that. You look specifically at Pakistan, and it's in an even worse state. It's basically at a standstill. No deals done in Q1, or at least over 1 million that are public. One deal done last quarter, CalPay. So hats off to them. It's very challenging out there. I think why is that? What's going to make that turn around? I'm not sure. I think there's still a lot of dry powder out there. There's still a lot of people looking for deals, but the bar has been set that much higher, and I think there's a lot less founders considering this as an option just because they know how hard it is versus probably what it was a few years back. So it's definitely not for the faint-hearted. Entrepreneurship never was, but there was definitely more tourist capital and maybe more tourist founders a few years ago than there are today. So it is challenging. Having said that, top teams are still getting funded, and CalPay in Pakistan last quarter, and it's the same everywhere. Good teams with the right setup, the right market, the right model will get funding, and those rounds can still be competitive, and as competitive as they were 2 years ago. The positive of if you want to be optimistic, the positive of all of this is once you have that capital, there's a lot less competition in the market. And everyone, as you mentioned, is just focused on sustainable growth. There's not that sort of aggressive top line growth for all, at all costs. It's really positive unit economic growth. And yes, people are being more cautious with their runways and all the rest, but I think, yeah, for the lucky or fortunate founders that do have capital, it is a good time, I think, to be in the market. That's a generalization. Obviously, there's a lot of specific cases, and we can talk about Pakistan if you like, or we can talk about other markets. But as a generalization, yeah, I think it is still doable if you have the right team, the right setup, the right experience. It is still feasible to raise capital, and there is dry powder out there. We raised our fund in 2022. We're 40% deployed. We're aiming to do about 20 deals a year. So, we're still pretty active, and we're definitely not the only ones. There's many out there.
I love that. And I think, Charlie, that like cautious optimism, right, is like, hey,
Yeah.
I mean, because I feel like now it's a time for beavers. I always look at it, I'm like, if you just put your head down and you keep building, it's like, at the end of the day, I mean, if you start to show your revenue multiples, I mean, the math needs to math. It's like no matter the market, no matter all of that, I mean, you will go through cycles. Yes, it's harder, but I also think that the noise has died down, and that competition, or like that tourist founders, I feel like there was so much hype chasing and all of that, and I think that's settled down, and overall that's a good thing for the tech ecosystem. I'm also keeping an eye on some of the questions. One question that we can do very fast is, what is your typical ticket size, check size?
Yeah, so we're coming in at pre-seed and seed. We're typically looking for around 3 to 5% ownership, which generally translates. It's obviously dependent on the valuation. First ticket's probably around 150 to 350K dollars.
Yeah, no, that makes total sense. Awesome. So because we actually have quite a few questions, so I'm just gonna jump right into some rapid fire questions that I have for you, and then we'll just go straight to the Q&A if that's good with you.
Sure,
Awesome.
let's do it.
So rapid fire is, just whatever first comes to mind. It depends is not an answer. It has to be like some kind of an answer, so we'll just go with that. Okay. First question. The most rewarding part of being a VC?
I think there's a short term and a long term answer. So short term, the most rewarding part is the people, the entrepreneurs you get to meet. And to be fair, the team members you have around you, the co-investors, so people at large. Initially, I was thinking entrepreneurs, but it's actually broader. It's entrepreneurs is probably the cherry on the cake. But people at large, it's a great ecosystem. Long term, it's finding out when you're right, and also the lessons you learn when you're wrong. But it obviously takes a long time to know if you're right in VC. It's a 10-year fund life cycle. But that is a huge reward when it comes together.
If you hit it, I love that. Okay, most common mistake founders make during pitch presentations?
I guess the one that ties everything together is communication. You can have, I can see many pitches and some I'll say no to, but someone else will back. So all VCs have their own opinion, and it's not always the fault of the entrepreneur that they're maybe in a space or a sector or something that I don't have conviction on. I think communication is the one thing that's common to all pitches that is in control of the founder. And there's nothing worse than you have a 30-minute call the first time you meet the entrepreneur. Maybe it's their only chance to communicate, and if they get that wrong, if they it's unclear, if they are perhaps talking about very complex things and they're unable to distill that into something everyone can understand, if they don't convey their emotion or their passion or what drives them, what excites them about that, all of these small communication tips is something I would definitely recommend people to spend some time on, and get help if needed.
Yeah, no, I actually agree on that. Like storytelling, I have seriously come to believe is one of the strongest skills a founder can have. And I learned by heart my 60-second, my 2-minute, my 5-minute, and even my 20-minute pitch, right? So now it's like IKEA blocks that I can put together, and it sounds like I'm so eloquent, but I can actually do it in my sleep because I know all of the building blocks of it, and I know like
Yeah.
kind of the nuances of it. So I do think
Good pick.
that it's a big competitive advantage that you can have. An emerging market you believe is underrated. Hint, hint, you're on Park Launch right now.
Yeah. So either I answer Pakistan or I don't answer. You can take it as you will.
Exactly. You have two options. No, please. I mean,
Emerging markets at large. There you go.
okay, I like that. Your favorite way to unwind after a long day?
Two things. It's either with the kids because they completely take your mind off, whatever you've been talking about in VC, they want to talk about their drawing or I don't know, some random thing. So kids or a run. I love running. It's a great way of meditating.
I love that. I love that. Awesome. All right, we're going to pick one of three. I'm going to give you three options. You're going to pick one of each of these, and then we're going to start wrapping up.
Okay.
Most important factor when deciding to invest: founding team, market opportunity, or the idea?
Team.
Team. I love that.
You want to say
Most
why or
exciting.
go onwards?
Sure. Tell me why.
I mean, I think if you have a great team and they've got the market wrong, they can go away and figure that out. If you have, great market, the wrong team, some other team will do it anyway. So you need the team before all else.
I love that. It's the jockey, not the horse, especially at this stage. I love that. Most exciting.
I don't know if I'm not a horse rider, but I don't know if that analogy makes sense because I don't know. I think the horse does all the work in the race, right?
Yeah, but the horse is
You
kind
need
of
a
like
jockey on the call.
you get the jockey on the call.
Yeah,
But that's founders. Yeah, I've been watching too much Olympics right now. I think that's why I'm like all like Snoop Dogg and horses. That's what's going on right now. But most exciting stage for startups: pre-seed, seed, or Series A? Choose one.
Yeah, that's impossible. I guess seeds, because pre-seed you still don't really know if you have that product market fit. Hopefully it's seed you're getting into that, and then by Series A you should already have it. So I guess in seed is the exciting part. You have it or you don't.
Yeah, and I love that like kind of dopamine hit that you get when you start to see that traction go through, when like, it's like progress becomes tractions, becomes product market fit. I love that. Most important values in a founder: grit, experience, or network?
That's a tough one. My initial gut was going to say grit, but then as I was thinking about the response, I thought experience, then I thought network. So I don't I'll stick with my gut, which was grit, but it's yeah, all are important. I guess I would be grit, network, experience.
Oh, I like that. Okay, so ranking. I like that. So it's grit, network, and then experience. I love that. Very cool. That's a tough one. Sorry. Well, I wanted to kind of like throw those out, but I think the most important part is I'm just going to start going through some of these questions, that are in the chat. So, yeah, there's quite a few. How do you distinguish if a technology is being overhyped or will be impactful in the future? Wow, that's a good one.
That is a good one. I mean, I think as a VC, you've got to make your own decision ultimately. And I think what hype leads to is that sort of herd mentality. And it's often hard to extract yourself from that and take your own decision. And sometimes it'll be right, sometimes it'll be wrong, but you've got to make that decision and do it with conviction. So I guess it goes back to sort of that fundamental analysis that you do with any opportunity, whether it's a technology or whatever it might be, and just really trying to think through, okay, what is this impact? What is the influence? And do I really think this can be instrumental, game-changing, life-changing, whatever you want to call it?
I love that. And I think we saw a lot of that with Web3, right? It's like, I mean, there was a lot of hype driven, and then I feel like blockchain got kind of muted in crypto because of cryptocurrency. I feel like, there's a lot that happened in that space, that there's still really cool builders out there, but I think the space has taken a hit almost because of that. It's like
Yeah, I mean, I think those are the big ones that everyone will point to, the sort of Web3 and now the AI hypes, trends, and we can debate on that. I mean, I think there's many other smaller ones that we've seen that, they've come and gone. I think telehealth was kind of one that sort of came and went and has to some extent been disproven as a model. You mentioned edtech in Iraq and that sort of distance learning. I think that's also to some extent come and gone. It's worked in some markets. It's not delivered in others. So, there's probably many examples we could go on with. And I'm not saying at all that we got them right in all cases. I think what's most important is that you learn from those mistakes and take that experience with you to the next trend that's going to come and often has similarities.
I love that. No, and super appreciate that. So I think this one we got a couple of times, Charlie, kind of like what strategies do you employ to mitigate currency risks, financial uncertainties in emerging markets?
So the main tool that we have is diversification. That's the number one mitigant that we can employ. You can't hedge in the VC space, at least with our stage and our strategy. You can in private debt, but yeah, definitely in private equity, venture capital, it's extremely difficult. So yeah, it's about diversification. It's also the time diversification. You invest across a period of 3 to 5 years, depending on the fund, and then you divest over further approximately 5 years. So you have that time diversity. That's one of the key, I guess, components to our investment thesis, is being geographically diversified. So between Latin America, Africa, and Asia. The other one that's kind of from the macro mitigants level. I think from the micro level, with some portfolio companies in markets where Pakistan would be a great example, where there's been massive currency devaluation. Egypt would be another, Nigeria would be another. It's about backing companies where there is some hard currency revenue opportunity. Argentina would be another one for LATAM. So we've seen that if we take Pakistan as an example, we've seen a number of our portfolio companies not necessarily pivot, but expand into the Saudi or the GCC region and try and bring in some hard currency. And I think that ability to sort of look outside when there is that challenge on your doorstep is also, a fantastic sign of a true entrepreneur and a founder with a lot of grit.
Yeah, that's at the literally the crux of it, right? So this one's has been said multiple times, so I'm going to do it real fast. At what point of time should founders start contacting VCs after the validation of product launch in the market? I have an answer to that.
I mean, I think what's important is to know who you're approaching. All VCs invest at different stages. You have some that'll be pre-everything, idea stage. It's maybe more programs and people like Antler and Founders Institute and the like. There's other VCs that'll come in at pre-seed, like ourselves. Generally speaking, we want to see that there's something, but we do at times back pre-revenue. So I think it's about knowing who you're approaching and at what stage you're relevant for them. That's probably the number one answer to that question. Making sure there's an investor founder fit.
Exactly. I feel like, Charlie, there's a lot of, and especially when it's about cold outreach, I think as founders, we just like blast it off. And I think that's just so counterproductive because it's, it's reputational, but then it's also that not everyone's right for you. And at some point, founders need to learn how to say no to investors. I mean, not every capital is equal capital. So I think that founder investor fit is really important. We got asked this a couple of times as well. You don't have to name names. What has been your worst investment, and when did you realize you were wrong about it?
Okay, so being a VC, you've got to accept there's going to be failure. I'm yet to meet a VC who's got every bet right. So you got to accept failure. I mean, 9 out of 10 roughly startups fail. When you model for a fund, you've got to accept that, maybe 50 to 7 or 40 to 70% of your companies will graduate to the next round, but the rest won't. You can look at every stat you want. There's a lot of challenges. There's a lot of failure in this industry. So I think as a VC, you have to be comfortable that there's going to be failure. And I've mentioned it already, I think in this webinar, like you have to be able to learn from those failures. So for me, the worst failure is when there is a failure, but the entrepreneur doesn't have that, I'm not sure what the right word is, maybe doesn't have the confidence to come forth and speak to the investors about what really happened. Whether they're, ashamed by that, whether they're, at times it can be mental, maybe burnout, whatever the circumstances, I think that's the biggest loss for me as an investor, when you don't even get the opportunity to learn from it. You'll have some learnings no matter what, because you've been part of the journey, so there's always learnings. But learning is much easier when a founder is forthcoming, is transparent, and is open about it. And ideally, they've been open from when the challenges, when things started getting tough, way before failure was even on the cards. But yeah, I think I really appreciate founders who have failed, but take a lot of time to wind things down respectfully and just communicating very well, whether that's to internal stakeholders, so team members and so forth, but also the external stakeholders, which primarily will be the early stage VCs.
I actually think, Charlie, like my monthly investor update is just one of kind of like, I take that thing so seriously and so personally. And because I actually believe there's accountability, there's transparency, and the amount of confidence building, because I mean, you assume that you're on top of every investor's mind, but you will not get help if you like help them help you. And I actually think that my ask section, I'm always like, this is what I'm looking for, this is what I'm facing trouble in. And I think someone asked another question, which was like, when should you go to the board, or how should you manage your investors if you miss a quarter? And I think that's going to happen. That's literally part of the journey. It's not all going to be up and up, but I feel like keeping that consistent communication is what you're saying is just really important, because you might even be able to preempt things getting worse if you've just been on top of it.
Absolutely. Yeah, I'm a firm believer on that. Communication to investors is really fundamental. I think it's a skill as well. I think it's knowing what to put in those, that it's useful. Like you say, the more you give, the more you get. Help your investors help you. It is a skill about writing those and communicating those. And it's maybe not in everyone's nature to be so open and forthcoming about the successes, but also about the failures. But I think, yeah, as you said, it's about doing it consistently. Some people do it monthly, others do it quarterly. Whatever your cadence is, it's about that consistency to the approach.
I love that. It's actually funny. I was sending investor updates before I had any investors. So I would just like get on calls and be like, can I add you to my investor update? And I would send like monthly investor updates. Really early on, it was monthly. And I realized that no's are often not nows, because most of the no's became like, oh, this crazy woman still at it. And then it was like maybe, and then it became yeses, because, investors invest in lines, not dots. And I think if they see that momentum, you won't know when someone comes around. So I feel like communication.
I think that's a great tip. I'm not sure I've heard that one before. Doing investor updates before you have investors. I think it's a fantastic idea. Everyone should go away and do that if they're not already, because when you due diligence a company, often we ask, can you share me your last investor update or your last 3 investor updates? Obviously, if they're pre-revenue and pre-everything, we don't ask, but when they're very early stage, we still do ask for that. And being able to provide that, even if you have no investors, I think is a great testament to what's to come.
Yeah, thank you. And it's like, I'm happy, by the way, I build in public. I have investor updates. I'm happy to share them. Just DM me on LinkedIn. I'll happily share formats for what they have. They're honestly more a marketing tool in the beginning. You're telling your story, you're telling whatever that story is. So this one's an interesting one. When you're making an early stage investment or analyzing a company, are you asking yourself if that company will have a monopoly within their segment?
Sorry, say that one again.
So I think what they're talking about is, does it matter that the company is a monopoly within the segment, is like the only one that's within that sector?
As in the incumbent is a monopoly.
The startup is the monopoly, that they will end up owning the entire share of the market.
If that's their plan. No, I mean, I think it's unlikely in any case, but no, it's not necessarily a problem. I think if something is tending towards being a monopoly, it means the market opportunity is there, and then it's going to be competed against by niche players, and many competitors will come up in any case. So no, I wouldn't say that's a challenge. I think it's rather a strength if you're able to confidently point out like why you can build yourself such a defensible. And I think monopolies come because they have a strong moat and strong defense against competition. So if you can communicate that and that's realistic, no, that's not an issue.
Yeah, I completely agree. I actually think competition is validation as well. It's a good thing. It's like, I mean, to have that large enough market opportunity. I also think I often hear this, will someone steal my idea? Don't build info public, blah, blah, blah. I don't think there's any such thing as stealing your idea. It's the execution that matters. Anyone who's had a shower has had an idea. Ideas are plenty. I actually really think it's about the execution, and I don't think there's a monopoly. Okay. A few quick ones that we can do because we are okay. Favorite book that's on your nightstand, or favorite book, just book recommendations for founders?
I just read, well, it's not necessarily for founders, but I've super insightful. I just read a book called My Shadow Runs Fast, or Your Shadow Runs Fast, by Bill Sands. It's actually from 1940s. It was about a convict who then reformed, and there's a lot of great life lessons within that story. So super interesting.
I love that. Very quickly, what's your favorite quote that you most frequently revert back to?
Code.
Yeah, quote. Like a saying or a quote or a motto.
Quotes. Sorry, I thought you said code. Like,
Oh, I'm sorry. No, like not the line of code.
I mean, I got to give our Seed Stars one. They tried to bury us. They didn't realize we were seeds. And I think that's a great one for founders as well. You're going to get
Oh, I love that.
a lot of negativity pushing you down, and you got to find a way to grow up.
I love that so much. And that's that grit and that resilience
That's the
again.
grit. That's it.
That's the grit. Yeah. What do you know now that you wish you'd known when you started in VC?
Everything. I mean, listen, VC is a lot about, there's a lot to experience counts for a lot in VC, I would say. There's a lot of pattern recognition that goes on. Our job as well, or our thesis being multi-market and pan-emerging markets, you see a lot of the same problems and the same challenges and the same ideas coming up again and again. So just all of that experience in terms of what works, what doesn't, I think accounts for a lot. So yeah, VC is definitely a game where you're always learning and always improving.
I love that so much. This is an interesting one, Charlie, and I think this actually reflects a lot of self-awareness. How do you think about the founder versus the CEO? So do you sometimes ask founders to move on and bring a new CEO?
It's definitely starting to arise. I think it's a question of stage. I think at the beginning, through Series A or so, the founder has such a big stake in the business. They've normally brought a lot of their network, their experience, their grit and everything else to the table. So at the early stage, no, I think the founder needs to be there. And when there's a challenge with the founder, I'm trying to think, in all cases, most likely the business is not going to survive. It's very hard to take out the founder CEO and bring in someone else, because you need to solve for debt equity on the cap table. There's likely to be interpersonal challenges. So it's very, very challenging to do at an early stage. Later on, I think you're right. Like, there can be a time when you need to bring in more of the CEO versus the founder. So this corporate CEO versus the startup founder. not always the case. I think, it'll always be different. It is a tough conversation to have. I think, founders need to be aware that there may come a time, and they should ask themselves those tough questions and hopefully bring that forward themselves. It would save everyone a lot of confrontation and time. But it's definitely not an easy conversation to have, or an easy move to pull off. But it can be best for the business and best for all stakeholders, the founding team included, because if that leads to a better outcome, ultimately they're also going to be better off.
100%. So we're going to go through a couple, but a lot of people are asking, and I might not be able to get to all of the questions. A lot of people are asking, what's the best way to get in touch with you? So what do you think? Is that LinkedIn? Do they DM? Is there an email that you can share? What's the best way?
So, I mean, you mentioned it before, outreach and cold outreach. In my view, cold outreach is almost not worth the effort. I mean, there are times we've invested in companies we didn't know, and it's been cold outreach. It's very few and far between. Warm outreaches obviously take a lot more effort on the behalf of the founder, but ultimately, and it's the same for me, raising the fund and LPs, we learned the hard way. I think, cold outreach just doesn't work. It's got to be through warm referrals. And so, easier said than done. You kind of are always looking for that quick win, the quick blast out to a database. But reality is, referrals count for a lot. Every referral that we get, if Ali or one of you two, give me a referral, I know that you've probably seen at least 10, maybe 50, maybe 100, like depending on who the referral comes from. I know there's already been a big filtering. So referrals you take seriously, and it just cuts out a lot of that noise. This is obviously where it's maybe unfair for those who have a network, or who have been around longer and have built up those connections. And there's definitely some adverse selection that goes on there. So I know it's easier said than done, but if at all you can do a warm outreach, please do it, even if it's a lot of work. And it maybe means you asking and calling in a couple of favors. Cold outreach is tough. For those who want to do it, we have our online application form where all startups interested in pitching us can submit a few pieces of information. So it's the deck and a few other data points. Our team reviews absolutely everything that goes into that pipeline. So our form is the most consistent way. You can email us, you can message on LinkedIn. I would say on that, there's not going to be the 100% response, because you know what it's like, inboxes and things, you miss stuff. If it goes into our CRM, into our pipeline, everything gets looked at. So best way for us is through the form on the website.
I love that. And then actually, something that, I feel like often when people say, oh, you can't do cold outreach, like as a first-time founder who came from a non-tech, non-VC world, I mean, if anything, I have 29 investors in my cap table. Every single one of them can be like mapped back to a cold outreach in a certain way. But that was because I was building in public, and I had people who went to bat for me, right? Like you build that community, people start to rally around you. So even if they're not investing in you, they'll be like, I'll make a connection. So at the end of the day, that does become a warm referral, right? So, I mean, that network doesn't have to be there today, but if you build in public and you put that effort into showcasing your traction, and I think there's a way to build your network as well, even if you're starting from zero today, because I think a lot of founders hear that and they're like, well, I don't have the network, so I'm out of business. But you build a network for that warm referrals to start rolling in. I have two that Ali sent in bold, so I'm going to take these very seriously. The biggest mistakes people make when raising funds.
I think probably comes back. I mean, raising funds is ultimately about pitching and storytelling, which we talked on. And so, not to repeat what was already said, but I think it comes back to that communication and figuring out how to tell your story and how to tell it in the right words for the right investors you're up in front of. And you probably only are going to get that one opportunity for that, whatever it might be, first call, the deck that you share and all the rest. So you got to make sure it strikes the right chord.
Yeah. And this is where we have a little bit of like VC PR like VC perspective. But what would you advise me starting my career in VC in terms of retaining the values of goodness of technology can bring, or is it all about returns? I think you already talked about the double bottom line and the purpose and the impact, but if you want to shed light on that.
I mean, VC doesn't work if there aren't returns. The model, if you don't return your fund and whatever capital you raise, whether it's a fund or not, you won't have a fund two or a next iteration. So returns are, yes, the principle and the first and foremost importance here. Having said that, like I think to the other points, good technology will be good business, and good business is making your customers happy. So it's not just about making money in the financial returns. Whether, I don't know if they mentioned the sector or not, but if you're doing something in fintech, as we talked about before, if there is that population with a real need for something, maybe it's cross-border payments, maybe it's investment advice, maybe it's financial education, access to loans. There can be a real impact with what you're building, and it can have a real impact on customers. And I think that will be the most successful business. If customers love you, if they can't live without you, then you're doing something right. There's obviously, going to be counter arguments you can find, and I think if you look at the outcomes of those businesses, they might have had some hype, they might have done well for a period of time, but long term, ask yourself if they really did well. And I think if it comes back to that core question of customer value and the answer is not a strong yes, then it probably wasn't a success.
I love that. So it's not actually contradictory bottom lines. They feed each other. We have 3 more minutes, so I'm going to try to do like a couple more. What percentage of companies get follow-up investments from you?
So we're primarily the backers in the first round. So don't look at us as Seedstars International Ventures as a follow-on fund. It's mainly a constraint of our fund size. So the current fund is 25 mil. It doesn't leave a lot for follow-on capital, and we'd prefer to be catalytic in our first check, so that the first check is meaningful and it allows the companies to raise other capital around us and get to that next phase. So for us, the next round, let's say if we invested at pre-seed, that would be the seed, or if we invest in seed, that's Series A. Our main value will be bringing them to that round and then connecting them to the investors that will be leading that. We may chip in at times, but it's not a key objective for us in terms of the follow-on capital. I
love that. What's the most important KPI that an early stage startup should be measuring?
I mean, I'm a strong believer of the North Star metric, which needs to be somehow related to both revenue and the value that you're bringing your customers. So for some people, that'll be simple. It'll be, MRR or some form of revenue numbers. For others, it might be, I don't know, if you're a startup helping with wealth management, it would be the either investment deployed or perhaps even wealth created. So you need to find that North Star metric that is related to both the way you're creating revenue, but also the value you're bringing to your customers. It's going to be different for everyone, though.
I love that so much.
North Star metric, if you're not familiar with that framework.
And I actually think the North Star metric is something that gives a founder so much clarity, and you almost become brutal about the task that you put on your plate. And I try to do that every single day, where I'm like, if this is not revenue generating, delegate or just delete. It's like hold for later, because it's just, as a founder, you can't clone yourself. So the best you can do is focus on the things that matter. I love that so much. Once again, Charlie, I know I can tell by the number of questions that there are, and I am so sorry to anyone whose question did not get answered. This was just such a rich discussion, and I drew so much value out of it, and I can speak for the entire founder community over here that I'm sure that they drew so many valuable gems out of everything you shared. So thank you once again for being so open, so candid, and just so insightful in all of your reactions and your feedback. Once again, it's a tough time for founders out there right now. So conversations like these are very, very valuable in terms of discerning what to spend time on and how we take things forward. So thank you so much.
Miriam.
Check out Warm Intros, fine. find warm referrals to Charlie and maybe fill out that online form on the SeedStars website.
Totally. And yeah, thanks everyone for listening. Thanks for all the questions. I haven't been able to follow them on the screen, but if there are some really good questions in there, Ali and Miriam, we can always take them offline and maybe do a follow-up to this. But thank you all. I really appreciate it, and good luck to everyone.
Thank you, Charlie. Thank you, Ali, for putting this together, and thank you to the PAC Launch community. Bye, everyone.
Bye, everyone.